Welcome back to In the Know News, where we bring you the latest insights into the world of finance, technology, and global events. Today, we're diving into a crisis that's shaking the very foundation of the global financial markets. In just 3 short days, global equity markets have suffered a staggering $9.5 trillion loss, sending shockwaves through investors, economists, and everyday people alike. The cause of this turmoil? A series of unsettling decisions by U.S. President Donald Trump, particularly his insistence on maintaining aggressive tariff policies despite mounting pressure from economists and market analysts. The damage is already evident, with stocks across the board plunging as the fear of an impending recession looms large. The S&P 500, a key benchmark for U.S. stocks, saw futures signals pointing to a 3% loss, while the VIX index, which measures market volatility, spiked above 50, a level not seen in years. European markets weren't spared either, as the Stoxx 600 index fell 5% and Asia experienced its worst day since 2008. The sell-off reached far and wide, with major companies like Tesla, Apple, and Amazon seeing significant declines in their stock prices, adding to the overall chaos. As investors scramble to find safe havens, U.S. Treasury bonds and the Japanese yen have seen a surge in demand, signaling a flight to safety. Meanwhile, traders have begun pricing in an expectation of aggressive interest rate cuts from the U.S. Federal Reserve. In fact, there's now a 40% chance that the Fed may even announce an emergency rate cut as early as next week, before their scheduled meeting in May. This shift in sentiment reflects the growing uncertainty around the global economy and the impact of President Trump's tariff policies. Despite the increasing pressure on financial markets, President Trump has shown little intention of reversing course. Over the weekend, he dismissed concerns about the market's reaction, telling reporters aboard Air Force One to forget markets for a second. His comments added fuel to the fire, with many market experts now questioning when or if the administration will change its stance. Stefan Kemper, chief investment strategist at BNP Paribas Wealth Management, noted that the market is in a sell now, ask questions later mindset, looking for any indication that either the Trump administration or the Federal Reserve will start to shift their approach in response to the ongoing downturn. Meanwhile, economists are beginning to sound the alarm. Strategists are increasingly warning that deeper losses could be ahead if the U.S. enters a recession. John Stoltzfus, a strategist at Oppenheimer & Co., recently slashed his year-end target for the S&P 500 from 7,100 to 5,950 points, signaling a more bearish outlook for the remainder of the year. He acknowledged that uncertainty has reached levels that investors find difficult to manage as negative projections continue to mount. At RBC Capital Markets, Lori Calvasina raised concerns that the S&P 500 could plunge as low as 4,200 points if the full impact of a recession takes hold, signaling a 17% drop from recent levels. The market's instability isn't just limited to Wall Street or Europe. In Asia, the Hang Seng Index in Hong Kong dropped 13%, while South Korea briefly halted sell orders for program trading to prevent further panic. Even China, which has been a key player in the global economy, is grappling with its own set of challenges. Chinese policymakers have begun to discuss potential measures to stabilize both the economy and the markets, including the possibility of accelerating stimulus plans to boost consumption. As we watch these events unfold, one thing is clear: the financial world is facing unprecedented uncertainty. Investors are struggling to make sense of the situation, with many turning to safe haven assets in an attempt to protect their wealth. The question on everyone's mind is, how much worse could this get? As markets continue to adjust to the changing political and economic landscape, only time will tell if we're in the midst of a short-term correction or the beginning of a much deeper global recession. At In the Know News, we're committed to keeping you informed with the latest developments, and we'll be following this story closely as it evolves. Stay tuned for more updates, and be sure to subscribe for in-depth coverage of the biggest stories in finance and beyond. Thanks for watching, and remember, knowledge is power.